So now you know your regulations, you have a budget, you know how to cost allocate. Now you have to report, okay? You got to know your financial reporting requirements. What I'll be describing, at least the forms, will be what we require from our service providers for non-EWDD folks. Just see if there's something that you could use. Let me go through your handout. Mute everybody. So your handout, see on the side, I have your bookmarks. You have the PowerPoint slides, and then together with this packet, I printed the forms that we require. So that when I'm going over through the different sections of the form, you actually have it in front of you, because sometimes it's hard to see with Zoom. So you have a copy of the cash request form. I also attach a copy of the vendor request for ACH payment. I hope all of you are set up for this already and that you're not receiving manual checks anymore. But if you're not set up yet, please fill out that form and reach out to Glenn, Caillou, or Ben so you can be set up. I also attach a copy of the special bank account agreement if you'd like to apply to be on cash advance basis. And then the reporting forms, the expenditure report, and the schedule of personnel. I've attached it for those who are not with EWDD. And then I attached a copy of our financial closeout directive that we issued for 2021. For the closeout of 21-22, you will be seeing a similar one with just different deadlines so that you can prepare. So you know what will be asked for 21-22 and all the forms that come with a closeout package. So those are just for your information. So let's go to the slides now. There you go. Financial reporting. That is our Christmas picture from 2 years ago. Definitions first, just a quick definition of terminology. Why we need financial data. We use them to comply with grantors' reporting requirements. They help with the analysis of financial and program data against performance goals and target outcomes. They identify potential issues where you might need technical assistance on. They help identify funds that may need to be reallocated. For example, you're slow in your spending and we're getting to the fourth quarter. We need to know that right away so that if you're not going to spend it, we will probably take it and reallocate it to somebody else who can actually spend it. It provides information that impacts future funding levels. Requirements in the uniform guidance. I wanted to give you those specific sections that talk about financial reporting and what your due diligence responsibilities are as far as this area is concerned. So I'm not going to read them, but please know where they are. Okay, I'm trying to make it easy for you so you know exactly where to go. Tools for accurate financial data. Accounting systems should include chart of accounts to compile, identify, and track financial transactions by classifications that are required by your grantors. If you can't do it in your accounting system, have something outside of that system so that you can keep track and then maintain supporting documentation. Reliable, knowledgeable, and trustworthy staff to perform the monthly accounting process and produce the required financial reports. And that's why we always make this training always mandatory for your fiscal staff, your CFO, your controller, your accounting, because they're so important in you guys being able to be in compliance with this requirement. A program cannot be successful if it's just successful in program. A critical part of a program being fully successful is if the financial side of the house is in order. It has to be in order for you to be a fully compliant federal program or city program. You must have policies and procedures and good internal controls established within your organization. For grant reporting purposes, disbursement means there's actual cash out, either by check or transfer. That's what it means in the grant world, disbursement. Expenditures, they are charges made an NFE project or program, but for which a federal award was received. And see how confusing that definition is? That's what it says in the regulation. And the expenditures may be reported on a cash or accrual basis. I think most of you are on accrual basis. Very few that I know of are cash. But your charges may be reported on a cash or accrual as long as the methodology is disclosed and is consistently applied. But hold on, though. The regulation is okay that you be on cash or accrual, but you check with your grantor. Department of Labor, for example, for WIOA, they don't want cash. They want accrual basis. The regulation may allow either, But when we talk about the regulation, the subtitle where there are chapters for every federal agency, that's where we're going to say that if you go to the chapter for Department of Labor, for example, they're going to say, we know the regulation says cash or accrual, but for our grants, Department of Labor, we want accrual. That's where you will see that. So keep that in mind. If you're not sure, check with your grant agreement or your grant officer or your pass-through entity, okay? Accrued expenditure, accounting folks would already know this, meaning you have incurred the costs, even if you actually have not paid the invoice. That service has been provided to you or the goods have been delivered to you. Even if you haven't actually paid the invoice, it's already an expenditure in your records. That's what accrued expenditure is. And if that's the case, then it should already be reported in your expenditure report. They are goods and other tangible property received, services that have been performed, whether by your employees, your contractors, your subgrantees, your subcontractors, and other payees. And other amounts becoming owed under programs for which no current service of performance is required, such as indirect costs, annuities, insurance claims, and other benefit payments. So know what you need to capture when you report as expenditures. In general, they are costs that you incurred for goods and services received, regardless of whether the payment has been made, regardless of whether the disbursement has happened. Now, if a federal awarding agency requires reporting on an accrual basis from a grantee, but your accounting system is on cash basis, are you going to be required to then change your accounting system, you think? I'll say that again. You're using a cash basis accounting system, but say the City of LA or Department of Labor is asking, no, I want you to report accruals. Are you then going to be required to change your accounting system to be on accrual basis? The answer is the Fed is saying, no, you don't have to. Your accounting system can continue to be on cash basis.
Yeah. But,
right?
Yeah.
But if your accounting system can't accommodate it, what do? You must maintain supporting spreadsheets or schedules outside of the system so that you can still report on an accrual basis. They're not allowing you to report on cash basis. They're just saying, okay, then do something outside of your system is basically what they're saying, right? You must deduct any cash disbursements representing advances because an advance is not an expenditure yet. Note exceptions for some grants. So always check to make sure that you're aware of what your grantors are requiring from you. For those involved in serving participants, there is a rule where as long as the participant has been enrolled, even if the participant has not taken the class, if you were required to pay for the tuition up front, enrolled, and then they say, okay, but you have to pay 50% of the tuition or 100%, but yet the training has not been received. In Department of Labor grants, you can actually report that as an expenditure already. And that's just something I wanted to point out because in the accounting world, because the participant has not received that training, to us, that doesn't seem like an expenditure yet, but Department of Labor is saying, for workforce grants, this is okay. Okay, as long as you were required to pay that tuition in advance, you can report it as an expenditure. So we owe work source and use source centers. Please make a note of that. This is where it kind of gets difficult when you have grantors who absolutely will only pay you for actual disbursements only. The smaller grants tend to do that. They won't pay you in advance and they will only pay you for what you've actually paid for already. The City of LA can probably survive with that, but some nonprofits don't have the working capital to pay those upfront. So that's when you kind of decide, is this grant worth it for me? I'm not going to be able to run it if I'm not going to be reimbursed until I actually make the payment. Where am I going to get the money to pay it upfront? So before you get into a grant agreement, make sure you know the payment terms so you're not in a situation where how do you deliver the services because they won't pay you until you actually pay something. So make a note of that. Those are usually the smaller local and state grants. This is just a review from yesterday, financial obligations, okay? What you have in orders placed, contracts, sub-grant agreement, those kinds of things are already considered financial obligations because once that service is provided or once that equipment is delivered to you, you are obligated to pay. And you need to know this because some grantors actually require you to report financial obligations. I actually saw a question in the chat where they're asking why audit fees is considered admin. Who asked that question?
I did. This is
Okay.
Sheila.
What are your funding sources, Sheila?
It's WIOA.
Under WIOA, audit function is admin. So any audit fees that you pay a CPA, because audit function is under the definition of what admin is under WIOA, that's automatically admin. If that CPA is doing your audit for multiple programs, for example, you're only going to charge WIOA for their fair and proportionate share of that audit fee, right?
Yeah. Okay.
Okay. So again, financial obligation is a binding agreement. There's a contract. There's a purchase order. Okay. Definite and certain commitment, which creates a legal liability. That's the definition by the U.S. Comptroller General. Should not be confused with commitments, plans, budgets, encumbrances. Those may not necessarily be financial obligations if there's no contract in place. Okay. They're good for planning purposes, right? But do you report them as financial obligation in your reporting to the grantor? No. So accurate tracking of financial obligation data provides critical information needed to manage the grant funding over the period of funding availability. The unliquidated portion of your financial obligation, the unliquidated portion of your contract, is that part of your contract that you did not expend. That's what unliquidated means. So your total financial obligations minus what you've actually expended, whether that be cash or accrual, is your unliquidated financial obligations, the part of your contracts that you never expended.
I have a question, Catherine.
Yeah.
Yeah. How about security deposits on rent? How do you record that?
First, did you charge our program for your deposit? Yeah, that's the first question, and then the recording of that would be in your end. That would be a liability. That would be a liability.
So when you pay the deposit, then you charge the program, and then when you get it back,
yeah, we will get at the end of the term. You'll have to return the yeah.
So depending on the term of that security, right? Sometimes they don't make you pay the last month because they're going to apply the deposit against that. But yeah, certainly if that doesn't happen, it goes back to the grant that paid for it.
Okay.
So when you guys are closing, actually, one of the things that your program monitor is probably asking, did I pay for security deposit? Because I want that back now. You know, you are allowed to charge it because you were required to pay it to occupy the space. But once that lease is over and it goes back to you, it goes back to the grant that paid for it.
So you have to make sure that the moment you execute that lease, because I came across this a couple of years back, that you secure that liability the moment you know that that's because you're gonna get reimbursed on it on that year, but you have to put it into a liability account. So once it does end, like you're not gonna be at that rental anymore. You lose or you end the contract or whatever is a finance that no longer you're gonna be at that site. If security deposit is returned, then you pull from that liability fund. So that liability fund, you then empty out, clear your books, then you execute a check that will then go to the city.
If you paid for it.
If you pay, if you did get like if it was paid by the city, then you give it back to them from that point in time that you had done that security deposit back then, because it was like a hold. Because wherever you're renting or leasing, like many of us, we've been here forever. We've been renting the same places for years now. And then we do amendments to our leases and so forth. And that's how we plan our annual on what our rents and things are going to be on our live actual budget.
Actually, when the WIA program ended, we had a lot of security deposits.
Oh, right.
Yeah, that we had to ask the subrecipients to return to us, or if they're using still the property, they can continue. But if they're not using anymore the property, that security deposit was returned to us, or we required them to return the security deposit.
Yeah. Nancy, are you talking about crossing fiscal years? Because that would be my question. So, we pay the deposit in, 2020, but we don't exit the lease until 2022. So
Right.
we're paying the city back for an expenditure that occurred 2 years prior.
And that's why Nancy's saying book it as a liability, because once
It's a
you get that refund, you know that you have a liability that's going to clear now because you're going to pay the city back.
Oh,
Because without that security deposit, you can't secure, right, that space to be able to rent on. And some people maybe are only going to rent for 2 years, like you said. Some people rent for like 10 years on amendments. When that ends, when that lease ends, or we no longer, or even if we continue using that site, but it's no longer for WIA. If it's no longer for WIA, that money has to, or for the city, right? If it's no longer for the city, then it has to go back to the city. And
I understand that part. I understand that you have to pay it back. My problem is, of course, I don't have any control over.
Yeah, you'd have to check with your fiscal to see if there is a liability fund in there that's already recorded, so that you're aware of that, so that when at some point if this ends, then it's already been secured to be returned back to the city.
And that's ideal if you actually recorded a liability, right? But some agencies forgot to do that 20 years ago. And now 20 years after, they're exiting the site and they forget about the security deposit that they're going to get back, and they keep it. We actually had some cases where they did not know. And here's the fiscal monitor. Did we ever pay for security deposit for that one? So it doesn't matter whether you recorded it or not. If you didn't record it, then you've made a mistake in not recording it, but it will still be due back to the grantor. Okay, so program monitors, one of the things that you should always be asking for when an agency is moving is if we ever paid for security deposit, we want it back. I remember for the workforce side, they actually have like a tracking system of agencies that they paid security deposits for, because those can be in the books forever. Agencies can stay in the same site forever, and they can be easily forgotten. Okay, especially if the agency themselves forget that they actually charge a security deposit. So I don't know if workforce is still doing it, but I know at one point they know exactly which agencies they paid security deposits for. So Tony might be a thing for you to look into, Jackie, to see if you have a tracking for those. If you do, then very good.
Catherine? Hi, good afternoon. It's Sarai. So really quick, just a moral of the story. When in doubt, if you're not sure, and if you're dealing with very particular specific situations to your agency, when in doubt, contact your monitor, please. And if we need to, we'll reel in the experts, we'll reel in the FMD team. But when in doubt, just, you're not sure, follow up with us. We'll walk you through it, okay?
Okay, thank you, Sarai. So maybe for some of you, the first thing that you're going to look at when you come back to the office, did we ever charge a city security deposit when we moved from there? You better check. On lease, what's considered as financial obligation is what's due, meaning when you occupy the space, now you're obligated to pay, right?
Yeah.
Plus any portion of your lease agreement that may have an early penalty fee. An obligated balance, therefore, should be easy, right? It should be the part of your award that you never got into contract. It is therefore unearned grant. Unobligated balance is also the same as unearned grant. At the end of the grant, these are the funds that you return. Anything that's unliquidated because you have a contract but you never spend it, or you got an award and you never put it into contracts. That's also an unearned grant. Or if you have any disallowed costs that's not allowable to your grant and you therefore have to pay us back. Those are all unearned grants. And we never like to see those because there are funds that should have gone to the population that you're supposed to serve but didn't for whatever reason. Okay, those are some things that we never want to see, expenditures, when we give you a grant. Okay, the refund due would be your total payments received less final allowable expenditure. But maybe for that disallowed cost, we never paid you to begin with. All this is saying is if we paid you for those, you need to get back to us. I want to make sure you understand the difference between commitment and obligation and encumbrance. If you hire an employee, do you have an obligation? Everybody unmute. If you hire an employee, what do you have? An obligation?
Until they work.
Until they work.
So they work. Very good. All you have at that point is a commitment. Okay, nothing financial happening here. Once that employee worked, now you have a
Obligation.
and they what?
Liability. Accrued expense.
Yeah.
Oh, yeah.
Because chances are you're a pay period late, they've worked it. It's an obligation because now you are obligated to pay them, but it's also an expenditure at that point.
Okay.
Yeah. Say your salaries budget for 21-22. I didn't update my thing. Is that an obligation?
No.
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 It's just a commitment. Maybe it's not even a commitment. It's just a plan.
Right.
Nothing goes in your expenditure reports on your salaries budget. Remember that, okay? Sometimes I see agencies because they want to show that they have obligated their funds, they would actually include their salaries budget for the entire year. No, it doesn't become an obligation until the employee actually worked. Compensated time off, vacation. Remember we were talking about funded and unfunded? Yeah. So if you're an unfunded system, it becomes an accrued expenditure when the employee takes the time off, right? And now you can report that as an expenditure because the employee took vacation. The funded system is, it becomes an expenditure as the employee earns it, even if he or she doesn't take the time off. So that means you bill the city, but you put it away in a separate account or escrow account where you can then draw from when the employee finally takes it. Very few that I see that are funded system, very hard to track, but you need to know what your system is. Purchase order for supplies, what do you have? Didn't I just say purchase order? What do you guys have there? Do you have
Nothing.
an expenditure?
Commitment.
Nope. It's a commitment.
You have a
No,
fin-
it's an obligation.
you have a fin-
Obligation.
I forgot to update it. You have a financial obligation. A purchase order is actually similar to a contract because once you issue that purchase order, once they deliver it to you and you received it, you're obligated to pay. So once you issue that purchase order, it's actually almost like a contract. So it's a financial obligation. You may report this as a financial obligation. Equipment, purchase order.
Obligation.
It's a financial obligation. They delivered it to you.
An expenditure.
An expenditure.
What kind of expenditure?
Accrued.
Accrued.
Yeah.
Now you pay the invoice.
It's a actual expenditure. What do you call it? A disbursement.
Expenditure.
Actual expenditure. I mean, Mary is making her own, an actual
I'm making up my
cash
own.
cash expenditure. Now you're traveling, okay? And this is based on grant regulation, not necessarily in the accounting work, because sometimes it's different. When you make that travel authority, what do you have?
Commitment.
Okay, you're authorized to travel, Catherine.
A commitment.
No, an obligation.
Who said
Commitment.
obligation, Mary? Commitment. Nothing's going on, okay? The employee is just authorized to travel.
Yeah.
At least,
Yeah,
at least that's what a travel authority is for us.
Yeah, but see, in our system, once we authorize it, the travel office purchases the ticket. So it's a little,
Once you purchase that ticket,
yeah,
An obligation.
yeah.
it's not even, it's already an expenditure as far as
Yeah,
grants.
it's
Right.
expenditure.
As far as grants is concerned, it's already a cash expenditure. Now you're gonna approve the expense report from the traveler. Aside from the ticket, he incurred expenses while traveling.
Yeah.
You haven't paid him
With
yet,
expenditure.
Expenditure, yeah.
but you have the report from him that you are obligated to pay him. He incurred it while traveling. That's already an accrual.
Yeah.
For training, you have a contract with a training provider that was executed. Contract. What does that mean?
Obligation.
Obligation.
Financial obligation. You issued an ITA. What does ITA mean again? Is Fred here? Fred?
Individual training agreement.
Okay.
Yeah, individual training agreement.
Very good, Uncle Fred. See, even in retirement, Uncle Fred has not forgotten. So what do we have here?
Commitment.
An
Obligation.
Obligation.
I heard somebody whisper commitment. You should have been more confident with your answer. I heard commitment. Yes, commitment. Nothing's going on here. Participant enrolls for a training class.
Obligation?
Obligation.
Mhm.
Yeah.
Now they ask you, you have to pay me the 50% of the tuition. And I'm saying it's required for them to continue with the class. What is that 50%?
Cash.
Expenditure.
Expenditure.
Yeah.
Cash
Expenditure.
Now they have completed the training.
Cash expenditure.
Cash expenditure.
Now you probably have not paid the 50% yet. Cash, if you paid the other 50%, accrued if you have not. Okay, so it could be cost of training not completed.
I don't know what that.
Audit finding.
Question.
Audit finding.
Liquidated.
Obligation, okay? You had a financial obligation when you paid for the tuition, right? But at some point, the participant dropped off. You are not obligated to pay, so it becomes an unliquidated obligation. When you have something like this, run after the refund from the training provider if you had already paid for it, because guess what? We're running after you. Okay, this is one of the things that the Department of Labor made sure that you have a policy on the refund of training not completed, because some of those we forget about them, we never get the money back. Okay, refund received from the training provider for whatever reason. What is that?
Refund due.
Refund due.
Yeah, very good. You either reduce what you've billed to us, or if we've closed the contract, for example, then you return it to us. Very good, guys. Very good. Advance payment for subscription.
An obligation.
An expenditure.
Expenditure.
Very good. Cash expenditure.
Expenditure.
It's okay. Even if it's advance, it's okay. Advance payment for insurance premium.
Cash expense.
Cash expenditure.
Yeah.
Okay, facility lease. Okay, these are the big items. Okay, you have a 3-year lease agreement that was just executed.
Commitment.
Commitment.
A commitment.
Oh.
Obligation.
It's a commitment, but you actually have an obligation portion there.
Yeah.
At this point, the obligation is the cancellation fee. Because
Yes, that's
once
right.
that executed, you cancel, you're probably paying an early penalty fee.
Yeah, that's
Have
right.
to pay.
Yeah, that's
Yeah,
true. That's-
it is an obligation because there's already contract.
Not the entire 3 years though. This is where you have to be careful. It's a 3-year lease agreement. Okay,
Yeah.
the only part of it that you should report as obligation is the cancellation fee, if any. Chances are there will be. So if at any point you cancel, when you executed that lease, you are required to pay that cancellation fee. That cancellation fee is what you report as obligation. Now, the current month lease that's
Yeah, Carmen.
Cash expenditure.
Cash expense.
Accrued expense.
Or accrued.
That's sure pending.
lease cost for 2 years.
It's just an obligation.
It's a- yeah, Commitment, yeah.
Because the lease is not due, the rent payment is not due until you actually occupy. Or sometimes maybe you have to pay at the beginning of the month, in which case that's what you're obligated to pay. So depending on the terms of your lease agreement is, but you are not reporting the entire lease agreement for 20 years as obligation in your contract for this year. Okay, just remember that. If anybody's trying to inflate that financial obligation amount just to show that you're obligating the city money, that's a no-no. Okay, I do want to finish soon. So program income, you all know what this means. Gross income earned by the federal program or city activity as a result of you running that program that we're funding. Most of you don't have program income, actually.
No.
Are you renting a portion of the facility that we're paying for? Maybe? Are you selling something? There's a question. Can I ask Catherine to elaborate more on the incomplete training cost? We have some questions about that, as we have been informed those are allowable costs. If the training was not completed, there's really no obligation to pay. So I'm not sure why that's an issue. I mean, if you have a participant who dropped off and you paid for 100% of it, don't you get a refund at some point? No?
It depends on the percentage of completion, though.
Okay.
Mm,
So meaning if, for example, they have completed at least, say 90%, at that point, you are not subject to a refund.
Right.
Okay, then that's fine. Then you just have to document, there's no refund because that's the condition of the agreement with the training provider.
That will also involve the policy of the training provider.
It has to be described there that that's the condition Okay,
Yeah.
It should be in the training agreement. Yeah.
yeah, because if it's not there, trust me, you will be asked, probably by the program monitor or the fiscal monitor. So it has to be there. I guess it varies for every training provider. So an excellent point, though, is that you need to be aware of what those conditions are covering non-completion of training, right? So program income does not include rebates, credits, discounts that you may earn. Those are what we call reduction of expenditures because they're not income. So when you receive those, you should be reducing that expenditure that you're billing to the city. If you receive credits, rebates, okay? If we close the grant already, those that you're getting after we close, they go back to us. Different from program income. Included in the approved budget, I think for both of workforce and economic development, you do have a column for program income, right? I guess at that point, you already know that you're going to earn program income and what you're going to budget it for. Interest on advances is usually not program income. In fact, according to the regs, it's not. But check with your grantor. Department of Labor actually considers interest on advances as program income. Okay, some of them may require interest income to be included as part of your program income, but there are federal agencies, no, it's not, return it to us. If you're getting cash advances, you have to find out how your grantor treats interest on advances. Grantees must include program income reported and earned. There are no requirements regarding program income earned after the grant period has ended. This is kind of weird. After we close and you're probably continuing to get program income, that's actually not addressed in the regulations. What do you do with that? Are you obligated to send that back to us, or can you keep it as long as it's used for the program if it continues? That's actually a vague area in the regulations. I just wanted you guys to know about that in case you're earning program income after we close. I want to give an update. I'm actually working with our IT folks. We're hoping to be able to make those submission of cash requests and expenditure reports online. I was hoping to be able to launch it before I retire, but now we're adding the budget part too, meaning all your budget negotiation happening online as well, rather than you going back and forth. It's being added to this project. So that's what delayed it. And we only have one consultant who's actually working on it. I won't be able to complete it by the time I retire, so I'll have to transition it to the next leadership in FMD. Hopefully, we'll have something by the beginning of next fiscal year, right?
You might need to extend your retirement.
I agree.
I'll make sure to transition. I'm sure can continue this even without me. But the idea is to actually have that happening online so we can just get rid of emailing it to that financial report email address. It's not quite ready. I actually have to meet with them. But that's the idea, to have a budget module for it where you can ask for cash advance for reimbursements and then report your expenditures for that to be in one system. This will be ready hopefully by next fiscal year. Please. Yeah.
Yes.
Yes. There you go.
I have a question about that. Would we do possibly the way we were doing contracts during the pandemic, where we could do digital confirmations, like sign-offs?
And that will come later on. How do we do the signatures now? Because everything has to be electronic. One of the things that we learned from the pandemic is we can do almost anything digitally.
Yeah.
So we will have to figure out the authority levels within your organization. There has to be some kind of back and forth between you, the preparer, and your supervisor.
Yes.
And when it's authorized, then it gets kicked to the city and we can then do our thing. That's the idea. And maybe I was too naive to actually expect that I would be able to accomplish that in a few months' time until I spoke to our good IT folks. I'm like, are you crazy? You know how much background work goes into that? So just hold on to that, and I will make sure Glenn and Kayum, who's actually very good technically, might be something for him to be really involved in. And sometimes I do want to hear that outside perspective, Kayum having been from outside the city, and maybe there's something that we can change as we move forward into this new system. So just something for you to look forward to, okay? I know this is long overdue, so it needs to happen, okay? We have the same cash request forms. For cash advance, it's the same form here. If you need advance, you need a special bank agreement in place. Remember, that's in your handout. If you don't have a copy, yeah. Will there be training that will be provided to prepare fiscal and IT staff on the new? Yes, of course. I'm sure that's a phase when we introduce you. I'm sure there will be.
Catherine, can I suggest that you do a pilot
Yes.
for a couple of months with one or two agencies? before you roll it out 100%?
And maybe rolling it out July 1st of next year, maybe that's even ambitious. We only have one consultant who's actually doing this, and he's got other projects as well internally. So maybe even July 1st for next year is ambitious because of all the different stages. Once we're ready, you still have to set up the authorities, what system it's linked to, so that we're not constantly entering the same information that's already in another system, right? So it's quite a ways from where I was hoping it would be, but I had confidence in our IT folks, and I think maybe I'll ask Kayum to help out with that before I go. Huh?
The youth system is not planning to start the new program year until October of next year. So they're going to extend our current contracts for 3 months because we have a new RFP coming out. So maybe October would be a great time to roll it out.
But at least what the IT folks have is a design of what I wanted it to look like and what I need for that system to be able to do. And then we added the budget. So now our IT folks is doing the background work. But I've seen it. I looked at it and I'm actually happy with it, but quite a ways to go still, folks. I just wanted to give you something to look forward to because I know this manual reporting process is so due for an upgrade. Yeah. You can ask for cash advance if you don't have any specific conditions imposed by Edwin, where as a result of that, we are switching you to cost reimbursement. Okay. Or you don't have any unresolved cash management issues or cash management related findings, then you're okay. Or if you don't have any delinquent expenditure reports, you might be okay for a cash advance. So this is where you break down what you need by cost category, and then you break down that part below for the subcontractors. I'm going to go quickly for this one because I know you're familiar with this one. This is where you do your spending plan, where we kind of compare what you say your planned spending was versus what you're actually asking us. You're probably going to get a question if what you're asking is way ahead of what you planned for. Okay, and then explain any deviations here. This is where I want to call your attention on the certification. Sometimes for you guys, it becomes so automatic that you sign the preparer and the authorized officer. You're not even aware of what you're signing for. This is what it says. Okay. And I want to remind you that you are certifying that you've done this. Okay. No delinquent payroll tax returns is also part of what you're certifying. The schedule of personnel, you guys are familiar with this. And maybe there will be a change where there was a question whether do we put employee names or not, but probably employee names will stay, but this is where you show them. And then there might be some flexibility on fringe benefits. So hold off, try to anticipate that directive coming from Jackie and Tony's shops. And this is where you put your program income. If you have any match that you're required to provide, okay? That gets forwarded to your expenditure by budget detail. Okay, it gets forwarded there. And this is where you just put your budget line item expenditures. And I'm going through this because I'm reminding you exactly what you're submitting to us every month, what you tend to forget. If there's any requirement of the breakdown of expenditures, this is where you'll see. In this case, in this example, you're required to break it down by admin and program. Okay, but it could be something else. I wanted to direct your attention to here. There you go. Yeah. So this part is where you break down your prior period and current period expenditures. And we're asking for this because WIOA, for example, actually asked for this information. It's not to make your lives harder. It's just we need to keep track of it. Here is a portion where you're actually breaking down what's cash and accrued, guys. Cash and accrued. And this we had to add as a component of our expenditure report because of Department of Labor. Because we were not asking you to break it down, they dinged us for that one. And that's why that's on the expenditure report. Stand in, okay? Stand in. You guys always forget to report your stand in on your expenditure report. And then when you get a disallowed cost and you say, oh, but I had a stand in that I can substitute for that. Edwin's next question is, well, did you report it to us? Meaning, did you report it here on this form, on this row right here? Okay, if you have any stand-in costs at all, this is where it should go. Because stand-in costs that you're going to use must have been reported to us for it to be allowable to be used as stand-in cost. See, so must be reported to be used for disallowed costs. Okay, the cash status is where we're just asking you to separate what you've received to date, including in transits, less what you have actually disbursed. Why are we asking for this? Because we don't want to see a big balance here. Okay, remember that regulation where you ask for money and minimize the time elapsing between the time that you got the money and your disbursement? If we see month to month that you have hundreds of thousands of cash balance here, it might be an indication that you have a cash management issue. Okay, so that's why that's there. Beware of excessive cash balances that remain idle from month to month, meaning you receive the money and you're not making disbursements. Why is that?
But that wouldn't happen with a cost reimbursement contract where that would only happen with advances, right?
Correct.
Or those federal grants where you draw down the money ahead of time.
Cost reimbursement, you've already fronted the funds.
Yeah.
If you ask for the cash advance, then you better be using that pretty soon. We don't want it sitting there. Because if you don't have to make the disbursement yet, then maybe you should not have asked for the advance yet. Program income, this is where you report how you're spending your program income, how much you've earned, how much you've expended, and what the balance is. Closeout, that portion, okay? That portion at the bottom is for closeout purposes. How much are your final expenditures? How much have you received to date? Do you owe us any money? Or do we owe you any money is what that portion is for. Attached check if refund is due. You are required to submit your general ledger quarterly. This is because of a finding from the controller saying we're simply asking you for expenditure reports and we're not asking for your general ledger, and we don't see them until we actually go to your sites. So as a corrective action for that finding, their requirement was to at least ask you for copies of your general ledger, the reconciliation report of your ledger against the expenditure that you report to us quarterly. Okay, and that's due, I think, 30 days after the end of each quarter. It's part of our fiscal monitoring process. It may be required monthly as a result of our risk assessment. We'll see if there's any deficiencies there that we might want to correct, or there's a specific condition imposed on you. We might just ask for that monthly instead of quarterly. Or if there's an audit or fiscal review finding or a corrective action that are not implemented, we can make this more restrictive by asking for it more often. It's painful to do this because it's extra work for you on top of the expenditure report. So at least right now, at the minimum, it's quarterly, but it could be more restrictive if there's an issue with you guys. This one is only for WIOA. I wouldn't go over this one, but sometimes a grantor would have specific requirements, expenditure breakdowns that they might require further grants. And in those cases, if that information cannot be accommodated in the regular expenditure report, we might just have an attachment to that so that we can actually capture that data so that we can report. Okay. This one is due for WIOA as well. So I'm not going to go over that. I don't want to lose my my CDBG folks and CARES. This one is for LARCA. Common reporting issues, things that we see, timeliness. When we evaluate you, if you're constantly not meeting your deadlines, that's going to be reflected in your annual performance evaluation. At least the workforce side of the house actually asks us to evaluate you on timeliness, okay?
You know, I get dinged twice. I do. I get dinged for our contracts being late, and then I get dinged for our invoices being late. We're not allowed to submit invoices to you. Our internal processes do not allow us to submit invoices if the contract's not done. So it starts at our contract office. You know.
I'm not going to respond to.
You're not gonna back me up here, Catherine. Huh? You're not going to go to the chancellor and explain to him.
I don't know what to say. How's that?
Okay.
Yeah. But, once that contract period happens, aren't you actually allowed to start incurring expenditures or not really? What's the answer there?
We are, I don't know about other, but at UCLA, we are permitted to incur expenditures without an executed contract.
Donnie? For example, we know the contract is going to be July 1st to June 30. Are they allowed to start incurring as of July 1st, even if the contract was not executed until August?
That's a yes.
Yes, that's a yes, Catherine.
Yeah.
Yeah, it's the same on our side. There's a ratification clause on most of the contracts. The only delay is the PEP. So,
Okay. That's what I thought. So that means you should be submitting those expenditure reports, Mary.
Okay, but I have to submit them without a signature because,
Okay. And maybe just for reporting purposes, that way when Glenn reports her expenditure, we have UCLA's expenditures there. Department of Labor, when they audit us, they made it a finding when we're not able to capture. They've dinged us for that. So what they're saying is maybe you need to accrue because UCLA incurred expenditures already.
Yeah.
They don't like having the report to DOL and therefore to the Congress being understated. They're so big on accruals, Department of Labor.
Gotcha. Okay, we can do that.
I think, Catherine, I think the IR has a problem when the invoices are submitted and they have to pay without the contract.
No, I don't want you to pay
No. We're not paying without the contract. All I'm saying is we at least have the financial data to prepare our grant reports. But no, IR will never pay without a contract.
No, we're not asking for payment. We just
want the record.
Yeah.
We want the record. Okay.
And every year too, we issue a request for contract renewal and they accept or decline. And so that will then let them know, it's starting, beginning of the program year and the contract's in process. Then we have that 45 to 60 day window. So.
Yeah. And we do that.
Okay. So I'm just listing here the common findings that you might be dinged on. Reporting is just as important, okay? Especially if it affects your evaluation in the case of workforce. On economic development, I don't think we're doing evaluation on timeliness, but maybe something to look into, but we are on the workforce side. Sometimes you charge expenditures in excess of the 10% budget flexibility rule that we discussed yesterday. You've exceeded your admin cap, for example, and you still report. And that's fine for the fourth bullet, as long as at the end of the contract, that stays within the admin cap, which is fine. Sometimes you don't submit the required information, like the general ledger, the reconciliation, or your reports do not reconcile with other schedules, like your attachment is not reconciling with the expenditure report. And sometimes they're not signed by authorized official. Those are the common reporting issues that we have. So I'm right on schedule. I finished financial reporting at 2:25. Okay, I will give you a break before we get into your favorite subject, audit. Let's come back in 15 minutes, 2:40, guys. And maybe we can dismiss early, hopefully. All right, I'll see you guys in 15 minutes. I'm exhausted now.